This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
Let's check in on how U.S. Treasury futures are tracking because, of course, we have had some soothing rhetoric coming from the White House in the past couple of days. Of course, U.S. President saying he's not inclined to fire Federal Reserve Chair Jay Powell anymore, also suggesting tariffs on Chinese imports could drop, but we'll wait and see for a little bit of clarity there. But we're seeing some modest uptick in expectations in bond futures. Let's get over to our colleague Sherry Ahn now. Who's joining us with our next guest, Sherry.
Yeah, let's discuss everything to do with the Treasury space, credit as well. Bring in our next guest who says concerns about a financial crisis amid the recent bond market dysfunction looks overblown. With us now is Lotfi Karui, Chief Credit Strategist at Goldman Sachs. Really good to have you here in the Tokyo studio.
Thanks
I know that this
me.
is not the most comfortable chair, but we have really seen this huge instability in the Treasury space. Are we losing some of that edge that U.S. bonds used to have?
It's definitely felt like that the last, week and a half to 2 weeks, which is it's unusual to see this positive correlation, I guess, between yields and risk assets. And so from that perspective, if you own duration expecting that it would provide you with a hedge in a bad state of the world, it hasn't really worked that great, at least locally when you look back at the last 10 days. Now, there's been a number of explanations as to why that's been happening. One, as you said, the plumbing of the market or the function of the market has been blamed a little bit. It's really hard to find that in the data, but you do see, some measures of funding have sort of deteriorated a little bit, but not nearly as much as in some of the previous episodes, like March 2023 with the regional banking crisis or COVID. So it deteriorated a little bit, but not too much in my view.
So nothing like what we saw with gilts, for example, in 2022?
No, this is not an LDI October 2022 style type of moment in my view. And by the way, if that were to happen, then I would think that the Fed actually has the ability to intervene. And I think has to be a little bit of a distinction between managing the level of yields, which you should let market forces do that. But then as far as the plumbing or the microstructure of the market is concerned, I think there's a wide range of tools that the Fed can use if things were to deteriorate further.
The whole narrative this time around has been really the appeal of U.S. assets waning, right? Will this be a concern going forward?
Could be. I mean, there's definitely been some erosion of the notion of U.S. exceptionalism, and I think that has manifested itself into the performance of the dollar mostly, but also in the Treasury market. To that, I would add two things. One, you are heading into a period of a gross slowdown, and the magnitude of that slowdown is TBD. We don't know how much yet, and I think the next 2 months are going to provide a lot of clarity. But you're going into a slowdown with a very large budget deficit, and so that's an uncomfortable value proposition for investors, and that has contributed a little bit to the backup in yields. Two, there are question marks around foreign participation for sure, and I think those question marks are unlikely to abate anytime soon.
Does a demand that we saw for the 5-year auction perhaps soothe some of those concerns?
Absolutely. And in fact, when you look back, I like to think of that 3-year auction as another catalyst that sort of exacerbated the moves. Since then, we've had 2 auctions that were a lot more orderly for sure.
Not to mention that President Trump seems to be paying more attention to the bond markets, more than equities these days.
There seems to be greater sensitivity, I guess, to the price action in the bond market relative to the equity market for sure.
What are we seeing in terms of the plumbing in the corporate bond space?
Much better, actually. And again, this is another big difference between this episode and what we saw in March 2023 and certainly COVID. But the plumbing has held up dramatically better. I mean, you see it in measures like bid-ask spreads, measures of depth of the market. Of course, those have widened a little bit, as you would expect in a period of elevated volatility. But once you sort of account for that, as violent as the price action, had been, it's been fairly orderly in my view, meaning that risk has moved in a, pretty orderly fashion.
You've actually revised your expectations for wider investment grade bond spreads, right?
Yeah, we got
and then
there.
You think that, and you still think that the risks are skewed to the downside.
Yeah, a little bit. Look, I mean, we went from almost all-time tight levels in the dollar market to levels that are still below the medians of the last, 25 to 30 years. So we've definitely rebuilt a bit of premium. Now, the question is, if there's another leg wider, it would have to be driven by slower growth. And I really think that for now, we're kind of stuck a little bit in a range. I don't think we'll go back to those tight levels. But the next 2 months are going to give us a lot of clarity on the extent of the damage from this uncertainty.
How much wider?
From current levels, we do envision something like 50 basis points in the high yield market. But if the outlook were to deteriorate a lot more, we would certainly revise that even wider.
Are you seeing more investors being discerning even within the different sectors, especially when you talk about these tariffs hitting certain products?
So I think eventually, once you have clarity on the tariffs, it will catalyze a lot of dispersion. And that's true across sectors, but in my view, it's also even more true within sectors. So if you take the auto industry, there'll be winners and losers within that same industry. But right now, and this may seem a little bit paradoxical, what we've seen is actually the opposite a little bit, where dispersion has been coming down. And I think it speaks a little bit to the nature of the sell-off, where it's been fairly indiscriminate. You just sell what you can sell. In bad times. But eventually, I don't disagree with you that once you have full clarity on where policy is heading, it will catalyze a lot of dispersion.
You're here in Japan today. Are you seeing anything or hearing anything from Asian borrowers perhaps pulling back, a little bit more concerned about the bond markets in the U.S.?
Oh, definitely a lot of question marks for sure, but also a lot of questions about how to position your portfolio given that we're sort of entering this new phase in the cycle. The one key word that came up all the time was diversification. Give me sources of diversification if you're building sort of a multi-asset fixed income portfolio. I tend to think that private credit, for example, is a source of diversification in late cycles, particularly if you look at, asset-backed finance, where you're getting a risk profile that is less correlated from sort of the ebbs and flows of corporate earnings or the business cycle, but a lot of focus on diversification for sure.
Yes, so much focus these days on private credit. It's really great to have you with us, Lafi Karui, joining us here in the Tokyo studio, Chief Credit Strategist at Goldman Sachs. We do have more ahead. This is Bloomberg.
In case you missed it, on Bloomberg Crypto.
We believed in crypto for a very long time. We believed in DeFi. When you look at DeFi and the power of that, I mean, it's really restoring the power back to the people. There's nothing that DeFi, there's nothing that cryptocurrency on blockchain can't do better, cheaper, in every way, faster, more transparently than the financial system that we have right now. There's not a Friday that goes by where I'm not chasing a swift wire transfer, hoping it comes in on, before the 4 p.m. deadline, or trying to send one out. You could transfer millions and millions and millions of dollars worth of Bitcoin overseas, while having a glass of wine with your wife at 11 o'clock at night. That's a beautiful thing. Our financial system in this country is antiquated. Our financial system in this country has been punitive to so many different people. And so we're reinventing the financial system. I'm all in personally. I really, truly believe in this with every part of my heart and soul.
Don't miss Bloomberg Crypto live Tuesdays.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Time for morning calls now ahead of the Asia trading day, and PIMCO says it's starting to see opportunity in treasuries after a sell-off sparked by concerns over President Trump's trade policies. Its core strategies CIO Mohit Mittal told Bloomberg that treasuries start to look attractive in the 5 to 10 year point, given the US economy is likely to slow longer term. UBS Investment Bank has cut its dollar forecast for the second time in under 2 months, citing the US-China trade war as a key factor. Its strategists predict the euro will rise to 123 against the dollar by year-end, with the yen at 130 per dollar. The dollar index has fallen about 6% this year, and the UBS strategists now see it as a pro-risk currency rather than a safe haven. Right, let's look ahead to the Open in Japan, South Korea, Australia as well. Futures looking to be in modestly positive territory in Australia, a little bit of flat in Japan. More in a moment. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next?
On this episode, the continent has been silent, and people are always looking for new. And new means us bringing our stories to the world, told in a way and manner that is just going to wow you.
Premieres April 25th, only on Bloomberg.
Bringing you up-to-the-minute financial and geopolitical news whenever and wherever it happens. I'm Francine Lacroix in Davos, Switzerland, and this is Bloomberg.
Well, let's take a look at the SK Hynix earnings that we had out a little bit earlier. Another blowout result for the South Korean chip manufacturer. Profits soaring 158%. That is the fifth straight triple-digit rise that we've seen in profit. So that profit itself, operating income, $5.2 billion. That's 7.44 trillion won. Revenue rising to 17.64 trillion won as well. That is SK Hynix's second highest quarterly performance, and that was on the heels of record revenue and operating profit in the prior quarter. So let's get a little bit more on this with our next guest. SK Kim is Executive Director and Analyst at Daiwa Securities. SK, a blowout set of numbers here. I just want to start by getting your initial response to what we've seen this morning.
SK Hynix announces some upbeat the market expectation. So I think that the upside is coming from DRAM. So especially the shipment growth, the actual result is higher than previous the company's guidance. So which means that we see the more sales of the high valued product such as the HBM and DDR5. But on the other hand, NAND flash business remain weak. It's in line with our market estimate.
How much of what we have seen today can you put down to front loading and around fear about the tariff uncertainty? Are these sorts of numbers going to be sustainable in future quarters as the clouds around the trade war gather?
Yeah, clearly there's some food in demand from the tariff issue, but also at the same time there's some additional demand from the DeepSeek, in the demand from China, and also the China government, the stimulus measure, that is some we see some the higher demand for commodity memory, and according to the company, as the data point, they already guided for the higher shipment growth for the second quarter. It's almost double-digit growth for both DRAM and NAND flash. So, which means the power with the strong result will continue in second quarter as well.
Certainly, under normal circumstances, that increased demand from China would seem encouraging. But considering that the changes that we're seeing on trade and tariffs and the news flow that comes out of the White House is quite unpredictable at the moment, how challenging is it to make accurate forecasts about future quarters for SK Hynix and other chip makers as well?
Yeah, that's correct. But very recently we see some concerns on the therapy was easy, and also some AI demand seems to remain relatively solid. So originally AI demand is a little bit safe from this therapy issue. Because of even the AI demand is now it's from everywhere, and so the concern is more about some the second half is for the commodity side, because of which is the unexpected demand concentrated in the commodity DRAM, but HBM is a the Hynix they are leading in HBM, so they are relatively their revenue portion of HBM is way higher than other supplier. So in that perspective, the SK Hynix is, I think, their earnings and performance will rather depending on the AI. So which means some roadmap of the NVIDIA GB300. Which will use 12-high HBM3 product, and also I rather see some potential risks from some export control from the U.S. government, and relatively we can say the AI demand is a lot of comparable and more visible compared with the commodity side in previously the second half.
Definitely the story around AI-driven demand seems very robust. But you mentioned DRAM a little bit earlier. How about DRAM demand as it's connected to some of those more traditional markets like PCs and smartphones? How do you see demand in that sector?
Yeah, so overall the PC smartphone demand remain is weak. We can say it's stable. It's not that strong. But this year, clearly some replacement cycle for PC because of the Windows, Microsoft will stop supplying support for the Windows 10. So we already see some signal of the replacement cycle demand from the PC, and the smartphone. Yeah, smartphone is a little bit the question mark, but. I think that the iPhone, this year, Apple, while there's uncertainty in U.S., but Apple is working with the Chinese local AI companies such as Alibaba and preparing AI the models for China market, so that will result in some higher shipment. And also some the positive numbers from Chinese smartphone maker early this year. So yeah, some AI on-device AI demand is cautiously anticipating late this year, but we see more visibility in the PC side now.
Mm-hmm. SK, before we let you go, I just want to get your thoughts on the share price outlook for SK Hynix, because if we take a look at its performance over the past year, it's been a wild ride, but it's essentially flat on year. We've got short selling of SK Hynix at a record. What's your price target for this stock?
Our target price is 267,000 won. So we still see some upside close. It's way higher than like more than 40%. The reason the weakness is come from there's a short selling ban in Korea. So some short selling from the end of March. And also, one of the reasons is that the share price of Micron is a key competitor in the Nasdaq. Micron share price is down so much, so now the valuation gap between SK Hynix and Micron is quite narrowing. So that is kind of pressure on the stock price until now. But Hynix they showed that it's a strong earnings performance. It's based on the leadership, and then according to some research from the SK Hynix, they achieved #1 market share position in DRAM, recently. So if there is some uncertainties there, and maybe Korea government and US government, they will discuss on the tariff maybe tomorrow. So we will see, but hopefully. The better situation for the semiconductor industry, and then I think there's upside in the share price. There's some buying opportunity for investors.
All right, SK, we'll have to leave it there. Thanks so much for joining us. That is SK Kim, Executive Director and Analyst at Daiwa Securities. Well, IBM's shares fell in late trade on results that weren't strong enough to quell investors' concerns that tariffs and federal cost cuts will dent the company's business. Bloomberg's US tech editor, Andrew Pollock, joins us now for more. So, Andrew, the stock move didn't seem to match up with these solid earnings results. What's happened?
Well, I think over the past few months, investors have seen IBM as sort of a safe haven in that the stock price has increased 12% while the S&P's been down and most big tech companies have been down. And so I think they were looking for a little more. One of the analysts said that they expected the results today needed to be picture perfect. And when they weren't, investors were disappointed.
So what were some of the other key takeaways?
I think if we look at IBM's consulting business, that was down 2% in the quarter year over year, and that has been soft. And I think that's an area of the business that could be hurt more by the global economy if the U.S. especially goes into a recession. There's a greater concern there for IBM's business. The company is no longer a big hardware company. I mean, more than 50% of the revenue comes from software, and the software business seems strong, but the consulting business particularly has been a concern.
All right, Bloomberg's Andrew Pollock there on IBM's results earlier today. Well, let's get the latest now from the corporate front. Shares of Texas Instruments jumped and extended trading after better than expected forecast for the current period. The company says revenue could reach as much as $4.5 billion as demand for industrial and automotive components improves. The forecast is a promising sign for the chip industry, even as it braces for looming tariffs on electronic products. TSMC says it plans to begin production using its cutting-edge A14 fabrication process in 2028. Company executives say the new technology will help improve power efficiency and performance. TSMC remains confident industry revenue will top $1 trillion by the end of the decade as AI chip designers embrace new production technology. Apple and Meta have been fined nearly $800 million by the European Union for violating antitrust rules. The penalties are the first to be imposed under the bloc's Digital Markets Act. The punishments are far lower than previous penalties under traditional EU competition laws. The companies must comply with the EU decision within 60 days or face additional fines. Well, let's take a look at Japanese assets now. We do have Bank of Japan maybe potentially delaying rate hikes with a lower terminal rate as well. The IMF has certainly been encouraging the Bank of Japan to take a look at its tightening schedule with a view to the broader global macro environment around trade in particular. But if we take a look at the yen, that's been on an interesting journey this week. It's weakened again. We're back at 143.17. Really a story of dollar strength after some soothing rhetoric from the White House. Not only does Jay Powell appear to be safe in his job for now, but some conciliatory sounds coming from the Oval Office today about the potential to reach a trade deal with China. President Trump saying that the two countries are in contact every day. Looking ahead to the open in Japan at the top of the hour, we've got Nikkei futures looking quite positive now, better by 1.2%. We have more ahead on the Asia trade. This is Bloomberg.
Is this a negotiation or the new rules of the game?
It could be either.
It is up to the president how he wants to negotiate.
The higher the tariff, the faster they come.
A 90-day pause is not an eradication.
The trade negotiations are moving quickly.
There will be deals cut.
Trust Bloomberg for all the context and clarity you need as the tariff and global economy story evolves.
This year's bear case, very quickly, becoming the base case.
Nobody covers tariffs like Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television. Earnings season is here.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
The latest from the corporate front, Gucci's first quarter sales fell 25% as efforts to revive Kering's biggest brand again failed to yield signs of a turnaround. Luxury brands are experiencing tepid growth, and the escalating trade war has darkened the outlook for the industry. Kering expects improvement in the second half after tapping Balenciaga's former artistic director to be the next Gucci designer. Louis Vuitton has raised the price of one of its most popular handbags in the US after President Trump imposed a 10% tariff on goods from the EU. The never-full GM bag and monogram-coated canvas now costs $2,200. That's a $100 increase. The Bernstein analyst says not all Louis Vuitton goods are affected, as they do make some products in the US. Boeing says it's prepared to find alternative buyers for about 50 of its planes originally bound for China that are now stuck in a trade dispute with the US. CEO Kelly Ortberg says the company is in close communication with its Chinese customers. The plane maker reported a first quarter cash burn of $2.3 billion as it ramped up jet production well below the $3.4 billion that was expected by analysts. President Trump says he is not considering changes to tariffs on autos and auto parts. And while most Chinese automakers don't export to the US, the subject of tariffs still looms over the Shanghai Auto Show. Bloomberg's chief North Asia correspondent Stephen Engel joins us now with more. So, Stephen, been a weird morning on the tariff front. Again, dare I say it, we did have that report from the Financial Times saying could be some car makers exempt. President Trump saying not so. Where is this heading?
Well, it's on people's mind, obviously, because China is overwhelmingly the king of the supply chain for the automobile parts. And that's, all those fancy EVs inside the halls behind me get all the headlines, they get all the cameras, and they get all the bloggers that are out, of course, showing off the latest technologies in autonomous driving and self-parking and all that. But the car parts is the nuts and bolts, literally and figuratively, of the global auto industry. So a lot of people were talking about where are we going on the tariff front on the auto parts, because Bill Russo of Automobility told me that essentially Americans don't really fully grasp how much China has been inside cars globally for years, and changing that supply chain is going to take years. It just doesn't happen overnight, and will shift to other parts of the world. Chinese manufacturers will shift, but it's going to take a lot of time, and that's going to incur a lot of costs on particular American consumers in buying cars. So yes, we're talking about parts, we're talking about new technologies and the like. And also keep in mind that if anyone had any doubt that China is the leader in innovation in the automobile space, all they have to do is go inside and check out the latest models that are coming off the assembly lines and will soon be available here in this market. Questionable, obviously, in the U.S. market when that will eventually happen. But Bill Russo was also telling me essentially that this is going to be the monumental year where new energy vehicles will finally surpass the sale of internal combustion engine cars here in this market. And this is the world's biggest automobile market. So that is quite a sizable jump for NEVs here. They jumped exports last year, or not exports, deliveries of new energy vehicles jumped 47%, whereas internal combustion engines were down 5%. And Bill says this is the year that finally EVs take over ICE engines.
Well, we did, NIO is one stock that we saw move higher on Wednesday on a suggestion that, there might be some potential relief on tariffs when it comes to China more broadly. You've been speaking to the NIO executive. What's he been saying?
Yeah, William Li is the founder and chairman. I spoke to him yesterday. They've tried for years to reach profitability. They're still sort of doubling down that NIO will hit break even or profitability by the end of this year, and that they'll double sales. But the first few months have been not kind to NIO. They're re-examining their European strategy. They initially went into 5 fairly high-cost countries because they were basically marketing their product as a luxury product. So they went into a lot of the Scandinavian countries, but again, they found the cost structure. They underestimated the complexity of selling their cars and marketing them and distributing them in those 5 European countries. So they're re-examining their brand export plans, I should say, for Europe. They're going to be launching their sub-brands, Firefly as well as Onvo, into Europe, as well as many other countries, including Singapore, likely later this year, with a whole new distribution channel using partners instead of going it alone to contain costs. Here's a small portion of my conversation with the founder and CEO of NIO.
In the next 3 years, our focus will undoubtedly remain on the Chinese market, as China is the world's largest and fastest growing market for smart electric vehicles, which is also the most competitive. As a company founded in China, we must secure a sufficient market share in our home market and achieve sustainable operations. This year, we have launched 9 new products. Our chips, for example, can increase our gross margin by 4 to 5%. Additionally, we are making significant efforts in managing sales expenses and enhancing the efficiency of R&D costs. Therefore, we are very confident in achieving profitability in the 4th quarter of this year.
So I knew your new brand, Firefly, you're going to be concentrating on Singapore and other markets, including Europe, UK. How are you going to change the model there? Because you did go into 5 fairly expensive, largely Nordic countries in Europe, and you said you underestimated the cost structure there. So how are you going to change that cost structure at a time when there are tariffs as well?
Firstly, the tariffs will indeed impact our overall business plan. However, on the other hand, our new model Firefly is designed specifically for small car users. From a product perspective, it's very suitable for markets including Europe. The global market for small cars is approximately 20 million units. We will change our ways of cooperation. In the past few years, we have operated directly in 5 European countries. However, we will now collaborate more with local partners. We will have one partner in each country for long-term cooperation, leveraging their capabilities to expand our presence.
How are you going to stand out in the domestic market? You're doing the battery swapping technology with the Firefly. Are you in active discussions with partners? I know you have talks with CATL, but others. Who are going to be those who will help shoulder the immense costs of spreading across all the provinces in China?
We have invested in 3,275 battery swap stations in China for the past few years. This year, we have an even more ambitious plan. We aim to build battery swap stations in every county across the 27 provincial-level administrative regions in China. That means adding at least 1,000 more battery swap stations this year. This will certainly be a significant capital expenditure. First, we changed our approach this year by working with local partners in China, which will handle the construction of the stations. We have built partnership with more than a dozen companies. We will then rent the battery swap stations from them, which can help reduce our capital expenditure.
Bloomberg's Stephen Engel there speaking to William Li, the CEO of NIO at the Shanghai Auto Show. We'll be hearing from Stephen again later this next hour. We've got some breaking news out of Japan. Meanwhile, it is PPI services number for the month of March, coming a little bit better than expected, 3.1%. PPI services for the previous month also revised higher to 3.2%. Seeing a chart of the yen on the screen there, that's been weakening again, but a wild ride for the yen this week, 143.13 at the moment. We did hear from the U.S. Treasury Secretary Scott Bessent saying that the U.S. isn't seeking currency targets in trade talks with Japan. The yen softening and perhaps more of a story of dollar strength as much as anything else. So we've got more ahead on the Asia trade. This is Bloomberg.
Firefly. Are you in active discussions with partners? I know you have talks with CATL.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, special contributor Larry Summers of Harvard takes us through the first 100 days of the Trump administration, how the FDA helped create the opioid crisis, and sticking to the basics. 2 very different companies, Mars and Enel, have their own versions of stakeholder capitalism they use to succeed.
They are the foundation of everything we do.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onin, only on Bloomberg.
Let's check some of the stocks to watch when trade opens in Australia, South Korea and Japan shortly. An obvious move is going to be SK Hynix. Another blowout result there. Operating profit jumping 158% due to a global race in AI and stockpiling perhaps ahead of US tariffs. On that note, watching car makers as well. We had a Financial Times report that some automakers might be exempt from tariffs. President Trump ruling that out. It's up to you what to make of all of that. And Nintendo also seeing overwhelming demand for the Switch 2 in Japan. Market opens in Sydney, Seoul and Tokyo next. This is Bloomberg.